children.
What's a deficiency balance?
Meaning you're upside down on the home.
Yeah.
So they actually
So you
have a reverse mortgage.
you outpunt your coverage. You outlive
pretty much, yes.
You've lived too long for the statistical curve.
Exactly.
Hello, everyone. Welcome to the Real Estate Halftime Show. I'm James Harper, and I'm here at the secret headquarters in Hendersonville, Tennessee. We're excited to have our next episode, and this is a unique episode on how reverse mortgages, and we call them heck 'em for purchases, can work for you, agents, buyers. Stay tuned. Let's get to work.
It's time for the Real Estate Halftime Show. Sit back, relax, and listen to Nashville's premier inside scoop to real estate with the Mortgage Extraordinaire himself, James Harper.
All right, welcome back to the show. Again, James Harper, coming from the secret headquarters here in Hendersonville, Tennessee. Have a special guest today, Dean Germain, who is with Fairway Independent Mortgage right here in Hendersonville. And listen, we have a special show today. It's a little bit different than we've typically been doing because we're going to talk about a specific product, a product that can help agents close more deals, a whole different lane to be in that you may not have thought about in this ever-changing market. We're going to even give you an example or two of how using a reverse mortgage for purchase works. So welcome, Dean.
Thank you.
Dean Germain to our studio here, and we're going to really pick his brain over the next 25 minutes on how reverse mortgages work for purchase, and we call them what?
The heck 'em.
Heck 'em.
The home equity conversion mortgage.
The home equity conversion mortgage. So welcome to the show, Dean.
Thank you.
All right, so let's dive right in. Exactly what is a heck 'em for purchase?
Okay, so a heck 'em obviously is a home equity conversion mortgage. We said that. What it does is that it's an FHA-backed loan that allows seniors to maximize their purchase power by bringing in additional funds with their cash to help them purchase their home.
And so what age do they have to be?
It has to be minimum 62 for a heck 'em.
And so why is this product why hasn't this product been used or utilized, or why is it not very popular, you think?
So like anything else, when you first launch any product, you can write all the guidelines you want. You think you've protected everybody. And when it hits the masses, that's when you find your mistakes, your errors. I like to tell people the first airplane the Wright brothers flew. Would you get on the airplane today? Probably not.
Yeah.
But we get on airplanes all day long, every day. All the kinks have been worked out. So when these first came out, not only did they have a lot of bugs in them, but you also had a lot of people that were utilizing the term reverse mortgage.
Yeah.
And they were kind of coming in and doing things that were a little bit shady. And so it gave the reverse a bad name. So once that name was out there, you know as well as I do that once you have your reputation, it's hard to actually go back and repair that.
And what has changed to where it's more secure and clients should feel more comfortable using this product?
So
and agents,
exactly.
recommending agents. Sure.
So the first thing was the people who weren't actually using them. They weren't actually a government-backed loan. Hey, I'm just calling this reverse mortgage. They were equity stripping. They were taking people's homes. So the first thing to realize is an actual heck 'em backed by FHA protects the borrower and guarantees you can't be kicked out of that home. As long as you pay your tax and your insurance, maintain the property, you cannot be kicked out. And that's the number one misconception is people think, I'm going to lose my home. The bank's going to take my home. Not at all. It's actually protect your home and protect you and your surviving spouse to live in that home till you're 150 years old.
And so when did that all change?
So that's always been there. Well, no, I shouldn't say that. That has always been. They changed it around 2010 is when they added that in, where surviving spouses get to stay in the house no matter how long they're alive. There's other caveats that go with it, but they're still protected. So prior to that, they were not. So if you had somebody who was 62 years old, did a reverse, and their spouse was 55, when they passed, the spouse couldn't remain in the home. And so they changed some of those to protect them. And like I said, that was things they hadn't thought about. Well, what happens once they pass? And so we've gone through and we've protected it, kind of like, we mentioned, you always have safety recalls on cars. Hey, we found this out once we actually rolled out 1 million cars, we figured it out. Same thing. Until you actually have people tapping into the guidelines and find out what's going on, that's when you run into errors, and they've addressed those.
So why do you think that heck 'em for purchases are going to be more popular here in the next 5 years?
Well, we have seniors who, one, they're in homes that are not right for them. So they need to right size or they need to relocate. They don't have the same savings and pensions they used to have. And when they try to move, the home values are so much more significant, or they don't have the long-term care in place, or they don't have certain things in place that doesn't allow them to utilize their cash from the sale of their home and put in other areas to secure their future and still be able to purchase a home in the new area.
Doesn't there have something to do also with the population that are turning 62 and older as well?
Yeah, and 2024 is going to be a unique year. So with the baby boomer generation, we have 10,000 seniors a day turning age 62.
10,000.
Yes, but in 2024, it's going to be 12,000 seniors a day turning age 62. So this year is going to be huge. We already have a crisis on inventory,
yes,
and we have a significant increase nationwide really on our property values. So this is going to allow them to utilize their cash to pay for future services as well as still buy their home and never have a mortgage payment for the rest of their life.
Yeah, that's pretty huge. So if I'm 62 or older and I'm currently sitting in a home right now, and what things do I need to maybe think about as I go into my next chapter of life as it relates to buying my next home? You know, can I upsize still by buying a newer home? Maybe my home doesn't have much, has some maintenance items and is, fairly old and dated. So explain that a little bit more.
Sure. So, obviously with 12,000 people a day, if we just use the 10,000 a day, it's hard to blanket that kind of statement. So what should I plan for? Some seniors, they need a right size. They're not in the best, or they need a downsize. They're not in the best physical health. So they say, well, I've got this big, 2-story, 4-bedroom, 3,000 square foot home that I can't go upstairs and clean that anymore. So they need to right size. They need to downsize and get in that ranch home and get in the one that's more handicap accessible. Do I need to bring people in to help me? And then you do have a lot of people that are empty nesters. Like finally the kids are gone. We want to buy that big fat house and we want to entertain and have parties all the time. So they can take their money and let's say they're selling a home and it's $500,000, but to live in the neighborhood they want to live in is $700,000 minimum. Well, they can do a reverse purchase, bring in their funds. We bring in part of our funds. They get their big home. They're not tapping into their retirement portfolio to help fund that. So now they have the income still to have the parties and enjoy their big, beautiful new home.
Yeah, I think if you were to take an example of a forward mortgage that somebody would typically engage in, where let's just take a real estate agent that knows that somebody has a house free and clear. Maybe that real estate agent would guide them into that property, for example, that you're explaining. But really, what you're also saying is that, hey, I don't have to use all this $500,000 if I sell my home and buy this $700,000 home. I can save part of that, invest part of that, or just use it to have fun with, whatever you want to do. But it's not sitting in your house that it typically would have to be on a forward mortgage to get the outcome that you want, and that is either no payment or some small payment.
Correct.
Does that make sense?
It does. And like you say, you have I could put all my money in my home and not have a mortgage payment, or I can have a mortgage payment and keep all my cash, but you have a mortgage payment. So how long are you going to keep your cash? You're still making that forward mortgage payment. With the reverse, you can say, okay, well, based on my age, I get a certain percentage on a reverse, so I can buy the home that I want, keep a certain amount aside, and then I don't have a mortgage payment. So that's money that I can spend on my entertainment. I can buy a motorhome. I want to travel the country, but be able to come back and park in my driveway. It's your money to spend how you want. Long-term care, life insurance, it's yours. But it doesn't have to be tied up in the walls of your home.
So if I'm a real estate agent, and all the listeners out there that who are real estate agents, what are you think are the top 3 things that they need to know today to just identify whether one of their potential clients is a candidate for a reverse purchase for HECM, or a HECM for purchase?
For purchase. Well, obviously, number one is being 62.
Number one, 62.
Exactly. So we're learning right away that they should not be doing 30-year mortgages. There's other ways that we can actually handle their finance and help better their future, get them a bigger home. Most of the seniors don't want to have a mortgage payment. They will if they have to, but nobody wants to have a mortgage payment, especially if you're 65, 70 years old. Who wants to have that? So number one being 62. Hey, let's look at other options. Can we buy you a bigger home? Because we have the option to bring in a reverse for a portion of it. Number 2 is, are they prepared for their future? And that's not something that the real estate agent always gets into.
Right.
But if they know them, a lot of the real estate agents, especially here in Middle Tennessee, they have a very close relationship with their buyers. They financed 3, 4, 5 homes, or not financed, but sold them 3, 4, 5 homes.
Sure.
So they know them. They know, oh my gosh, you're not really set up for their future. So, hey, why don't we look at this other option where you can actually take care of your future? And then the one is, what are your goals? What do you want to do? Do you want to entertain, or are you looking to travel the country? Do you want to have a small house and then you want to travel the world? Do you want to buy a motorhome and just go on vacation, see everything the U.S. has to have, has to show?
What about from a transaction point of view? Is there anything different? Anything different for a realtor who is wanting to work with a listing agent and a seller to buy their home? Is there anything different that they need to do to prepare for a purchase transaction?
Not really. If they've done any FHA financing, the home has to fit FHA guidelines.
Sure.
Beyond that, honestly, some of these we close faster than you can close a forward mortgage. So a lot of your younger agents, they'll be confused when they see the closing docs at the closing table, because we still use a HUD, which we went to the CD, 2010 or 14, whenever we switched to the actual CD and LE. We don't have to send out LEs and CDs. So if the borrower is diligent, the agents are all diligent, we're buying a good, clean home, we can close fast, because we don't have to send out an initial CD. We don't have to send out LE. We don't have to send out a final CD before we go to the closing table.
Well, here's a big one. I think, anybody that is, 62 or and older, or maybe in their 70s, possibly even 80s, this thing called debt to income ratio can be a problem.
Correct.
And that is because they're on a limited pension or limited Social Security, where they might not even be able to qualify for a forward mortgage, but yet for a reverse, how does that work?
So we use what's called residual income. So what we do is we take the size of the home, how many people are going to be in it, because obviously the bigger the home, you have to heat it. Heating, electricity, all that stuff is more. We take the size of the home, the amount of people that are in it, and then based on our region, whether we're in the southeast, the north, whatever, we all have our own price. So there's a formula that calculates how much we need based on the square foot of the home and those two people. And then we factor in any other bills that they have. So if they have a car payment or anything like that, that's called their residual income they have to have. As long as they meet that residual, they get that home, because they don't have all the monthly mortgage payments.
Requirements are a lot less strict or stringent.
Significantly less. So for the most part, and nowadays, if someone's buying a home, $500,000 home, even if they're putting down $250,000, their mortgage payment is going to be $1,500, $2,000.
Yes.
At 50% debt ratio, they've got to show $3,000 in income,
which may be hard for a lot of people at that stage in their life.
On Social Security, no pension, et cetera. So yeah, that's very hard for a lot of people. But with residual income, the taxes might only be $1,500 a year. So we're only working in $125 for that. And then they have theirs for them to live. So that's a small portion, no car payments. So their actual residual income might be $600. They don't need a whole lot. And one person's making $1,100 in Social Security, boom, they're covered. They qualify.
How's credit different? Does credit matter?
Scores do not.
Scores do not. Very key.
Yes.
Scores
we're still going to
not.
look at their credit, because obviously they have late payments, and it's still FHA. It's still the government. So we're still going to look at certain things. But as far as their scores, it can be 400s. It can be no scores. We don't care about that. We're going to look at their pay pattern, make sure they're not in any kind of trouble. They're not having issues paying their debts on a regular basis. Obviously, with seniors, that could be leading into dementia, things like that. But we just make sure they're actually paying their debts on time. Things in the past, we're not concerned about it. We're not concerned about their credit scores. It's really just a matter of, hey, do you have pretty decent pay? Nothing in the past 12 months. It's very easy to qualify for a reverse mortgage, especially on the purchase side.
So if people want more information about how this works, how can they reach out to you?
So obviously they can find me at thedeanofreversemortgages.com. That's all my information on there.
Dean of Reverse Mortgages.com.
Yes. And, we can do case studies. It's minimal information. So a lot of people, since credit doesn't really matter, there's certain things we're going to want to know a little bit further down the road. We have to pull credit and look at it. But we can do case studies based on pretty much just their dates of birth. There's not a whole lot of information we need to show them what they can qualify for on a reverse for purchase.
Is there anything that they can do in addition to just doing a reverse for purchase? Is there any kind of equity line that comes from that possibly, or is that only on a refinance?
You can do it. So let's say, for example, somebody does have a lot of cash. They can actually do what's called overfunding their purchase, which will allow them to establish a line of credit. So it's a line of credit that grows for them guaranteed every month. So let's say they do net $400,000 on their house and they buy a $500,000 house. We'll bring in our reverse portion. They can overfund that and have that money where they've paid on the line of credit, so they're not paying any interest or anything on that loan, or it's not increasing their balance, but their line of credit is growing for them. And where that's significant is, especially when they're in their 60s, early 70s, FHA has the life expectancy age at 87. But most people I'm seeing a lot of people 90, 95. My wife's grandfather is just turned 93 years old. So if they establish at 62, that line of credit grows exponentially for 25, 30 years. So now at this point, they've got hundreds of thousands of dollars that if they need it for long-term care, to pay for service, or just travel even more. Hey, we've run through our portfolio. We still want to travel. We've only seen half the world. It's theirs to utilize, but it guarantees growth every month based on the interest rate of their mortgage.
Very, very interesting. Very interesting. So do we have any statistics on how HECM for purchases are as a function of the market, the market capture? I heard something along the lines of like 1%.
Yeah, it's very low.
It's very low, which if you're a real estate agent out there listening right now, I mean, there's a lot of opportunity. Why? Because guess what? There are a lot of 55 and up communities popping up everywhere, in that $300,000, $400,000, $500,000 range, right? Or maybe even higher in some areas. Why is that important? Well, explain how you don't necessarily have to be 62, right?
Correct.
But
you do for a HECM. One person has to be 62.
One person has to be 62, but not both.
Correct.
Right. And when you look at some of these newer communities, the majority of them right on 55, 56, 57, probably not.
No.
They're probably 62 and older. So I really think if there is a real niche to be able to help these communities and also have a real strong pipeline of combing, door knocking some of these older communities and be able to transcend them into one of these newer type of properties. Might be, ground floor. It might be ranch style, handicap accessible, whatever.
Well, my biggest thing that I like to talk to real estate agents about is right now we have an inventory issue.
Yeah.
On the mortgage side, on the real estate side, last year was not a banner year for most people. We did have a lot of people that do it. Exactly. And with real estate, part of the issue there is the inventory. We can't build fast enough. Construction costs are really high, so builders don't necessarily want to build too fast because what if prices do come down? They're upside down on their homes. But real estate agents have this portfolio, this database, I should say not portfolio, but database of clients. They know who's 62. And a lot of them door knock. Hey, you want to sell your home. And the first thing they hear from these seniors is, no, I can't sell my home because I don't know what I can buy, because they don't know about reverse for purchase. Yeah. So right now you have an agent that's sitting on 0 transactions. But she learns about the reverse for purchase. And she says, well, I can take you from this $300,000 house and get you into that new home that you need that's on one level over, and we use Durham Farms, and all those are, a lot of those are set up that way. We can get you in that brand new home over there for $500,000. You still won't have a mortgage payment. Well, how are you going to do that? So she explains reverse for purchase, or sends them to me, and I explain the reverse for purchase. What happens now is she took that borrower that she had 0 transactions, and she got a listing on that house. And then they like her so much because she found them that new home, she got the purchase on the new home. And then turns out she just happened to have somebody who needed that 2-story, 2,800 square foot house that those seniors are living in. So she got 3 transactions out of none by knowing how that works. Now, in our environment right now, if they sold for $350,000, $400,000, and we're averaging $504, I think is what it is in Sumner County. So she sells for $504 and they buy at $700,000. Right there, she sold $1.2 million in properties just for those 2.
I think if that went a little too fast for you need to rewind and listen to that last minute and how you can turn potentially 0 transactions into 3. So rewind that, get your notepad out, write that down, because that could be a really good takeaway of this segment.
And there's significant door knocking agents out there. It's very important for them to realize.
You're right.
Go knocking on doors. I mean, they can pull tax records, see how old people are, or it's their past clients. A lot of them have an old database. Oh, everybody that was 62, let me start calling on them.
Yeah. So I think, what our plan here is at Fairway Independent Mortgage is to bring more education to the street on exactly how this all works. I mean, a 20, 25-minute segment it's impossible to get to go over every kind of detail, testimonials, examples. We definitely plan to have some kind of a educational seminar that can also be streamed. So we encourage everybody that's listening in on the show to stay tuned, because in the next 3 to 4 weeks, we're going to do what?
We're actually going to have a class. We're going to have like a real estate 101 on heck for purchase.
Nice.
We'll spend probably 45 minutes to an hour going through how they work. And then we'll do a Q&A for as long as agents want to sit there and do Q&A. I'm a firm believer in this and love educating people on this. This truly significantly helps seniors and the real estate market.
Yeah. And so if you want to know more, you need to subscribe to this show. And we will also be able to make sure that we reach out and invite, if you want to leave your name in the comment section of this show, wherever you might be seeing it, on Spotify, YouTube, Facebook. Leave your note, leave a comment. We will engage back with you. We will make sure that we have you a part of the invite list that's going to go out for that educational seminar.
Yeah. And there's no question that's too dumb on this. There's no question it's dumb at all. I've spoken to so many SRES agents, and I've looked at the instructions that they teach them. And this is not even covered for a senior real estate specialist. They mention it briefly, and there's no education on it. So don't feel like you're asking a dumb question, because there is no dumb question.
You're right. And as we always say, knowledge is power.
Yes.
And this is one lane that if you just take a little time to learn the basics of, we've definitely had real estate agents come through our door that have never done a heckin' for purchase. And when they got done with it, they said, "Oh, wow, that was not bad at all.
Yeah.
That was actually really cool."
Yeah.
And, "Oh my God, my client loves me."
Yeah.
And so those are the kind of testimonials we want to hear. We want to be able to share, and we want to be able to get the word out for anyone that wants to learn about this product, this special product that's insured by FHA. And
when we say insured, not only does the FHA insure it, but they guarantee this non-recourse to the estate or the heirs.
Very key.
So nobody can ever owe a deficiency balance on this loan, no matter what. So that's the thing. I don't leave a burden on my children.
What's a deficiency balance?
Meaning you're upside down on the home.
Yeah.
So they actually have a reverse mortgage.
You outpunt your coverage. You outlive
pretty much. Yes.
You've lived too long for the statistical curve.
Exactly. But that's number one fear in seniors, outliving their money. That can happen.
Sure.
So they can utilize this. The balance can go up. Their home could go in a recession, and now they owe more than the home is worth. And that's common. We went through that in 2008, 9, and 10. It happens all the time. We have recessions. But if that happens and the senior passes, the heirs are not responsible for that deficiency balance.
That's the perfect way to end this segment. That solves the myth that we originally started with. And so stay tuned. Pay attention to whatever invites are coming out your way. If you're a real estate agent, we probably got your information, or we're going to find you through our social networking. We'd love to have you come here to our secret headquarters at the Emerald Room here in Hendersonville. Thank you for listening to the show. Thank you, Dean, for all the words of wisdom that you've brought to us today. And we hope that we see you here on the show. Or we hope to see you here when we actually have our seminar coming up here in the next 3 to 4 weeks. So,
absolutely.
So thank you for listening to the show, and have a great day, and let's go sell some real estate.